Good evening, YouTube. I'm back with another YouTube video after a very long time, guys, because the reason being having multiples of burials and funerals, guys. Yeah, but it is what it is, man. That's why I've been absent for a very long time, guys, because it's been funeral after funeral. But we are back, so excuse my drawings. I did this in the morning with the with the private community. So right now I actually have class around 8 o'clock. So I was like, since I have time, right, I can drop a YouTube video, right? So now if we look at the dollar index, getting straight to the point, I like to look at the dollar index. Why? Because I trade EURUSD, USD pairs. So USD pairs, they need when you trade USD pairs, you need to know what's taking place with the dollar, right? The dollar index, which is the DXY. So according to monthly, what I see, and always remember, guys, whatever that we do here is for educational purpose only. I'm not giving you any advice to buy or sell unless you are in some of my communities. There you can get a signal with a proper stop loss and TP. And beside that, guys, whatever that I do here is for educational purpose only. So this is how I personally approach this thing of trading, right? You don't need to complicate things, but you need to follow the rules. The following the rules here is first paying close attention on what institutional traders are doing, right? And if I go to line charts, you will definitely see that this is an institutional range. But if you look inside this range, there's a bullish structure inside this range, right? But according to institutional, it is a range. But inside, because this is an institutional range, that means it's a powerful range. Because if you look here, you can see we have a major low, right? We had a major low. We put green. Major high. Now this major low took out this high and generated a major higher high. From this major higher high, we generated a major higher low. From this major higher low, we generated a major higher high. From this major higher high, we generate a major higher low so that we can generate another major higher high. So they can even maintain this range or they can even break it, right? Now the question is, when they break it, where is the first area they can react from? Now if I go back to candlesticks, like I said, and we focus on the current major structure, you can see that price is still taking out higher highs and maintaining higher lows. So which means that right now I'm dealing with this current range, which is this low and that high there. All right. So from this high and low, if I take my Fibonacci from the bottom to the top, you can see that prices has retraced 50% to 71.8 POIs. Now this is a good retracement zone, right? Why am I saying this? Because this this is discount, and we even tapped a premium leg, because if we look at the 78.6, that's a deep retracement. But we also have untapped order block 2.0. I thought I have it here. Can even put it, no, the major one, right? So we have order block 2.0, which means that where price it is, price can still push but fail to break above. They can even react from the supply, come back to this one, then push to the top, right? Why am I saying this? Because let's go back to candlestick, so red line charts. If you look at this, this is an institutional retracement, because we are getting this retracement on a monthly time frame, right? This is an institutional retracement. So which means even if I remove this, you can see that we have tapped 78.6. We are at the bottom of that range. We have tapped 78.6. From 78.6, we shifted structure inside, which was here, which is our internal change of character. So this internal change of character was simply confirming that we have this as a leg, right? But remember, where they are, they can push above or they can react from this current supply, because if you look at this internal correction there, they are respecting supplies, right? We have a supply here, but the major structure is bullish, so which means these supplies can also turn into traps, and most of the time they're likely to turn into traps. That's why I say that from here they can maintain lower time frame structure to tap in here, then from here they can even fail to close above there, so that they trap the sellers, come here, take out the sellers and push out, right? But now the good thing about this is, because even where they are, if I take my Fibonacci from here to here, I can see that even if they don't push to that supply, we also have 50% and 61.8. And now when you look inside 50% and 61.8, we have a breaker block here, right? We have a breaker block there. We can even push it to the side, still okay. But this is our breaker block here. So, and if you look at the time frame, this is a monthly time frame, which means that from here, even if we don't go to that supply, the candlesticks that will be pushing from here, going inside or around 50% to 61.8, they can take 2 to 3 months. It will depend on the volume and on the momentum. But if I go weekly now and we check weekly, you can see that according to weekly, we have a structure inside. Price was maintaining lower highs, breaking lower lows, because you can see here we had an internal break of structure, right? After they broke the structure, they maintained this high, they induced here for retail traders to think that price has changed the character, but this was simply just an inducement. So if you pay close attention to this break of structure and this one here, now this one is weak, which means that this one was an indication that price is sweeping liquidity, because after this you can see that for the first time now they came and changed character, and after they changed the character there, they came to the last selling candlestick before the push up, which is our demand candlestick. From that demand candlestick, we can see that they were pushing from 97, then they changed, so they broke structure around here. So now after they broke structure, okay, let me take a sip. I'm not an energy drink fan, but it is what it is. After they changed character then, after they break structure, they also came to this, right, to this demand here. Now from this demand, what they did, they are reacting from that demand, right? So now since they are reacting from this demand, I'm looking for price to come and take out $101 from 98, right? But let's go in here so that we can see properly. Now if you look at the structure, this is a correction, right? We had a low, lower high, price shifted here aggressively, lower low, lower high, equal lower low, fail. This is a lower low, but they failed to give us this break of structure. So this was a sweep when they started to close inside here. Then from here they gave us this high, higher low, higher high, higher low, higher high. So now, as much as we have this supply, we will pay close attention on how price is approaching those levels, right? We will see on how price is approaching those levels, because if we put this one here and this one here, that one now is clear and clean. But first we need to deal with the dotted line, which is $101.53, right? And if you pay close attention to the price action around this demand, you can see that we are left with like a couple of hours before the market close, and as long as they didn't close below here, I will take this as a liquidity sweep, right? Just like this one. And after that, I will now know that this week they can even decide to close here, even and with CPI coming up, we will definitely get those movements, right? So even here, like, yeah, man, like those are the levels that you need to look at before we can even push to that break block there. Now going to daily, we can see that daily we have this higher low, higher high. Is this a higher low? Yes, it is a higher low, because I can see already price is shifting above here, right? And currently I'm in gold sales because of this dollar index here. Now from here, I can even see that there's no need for me to drop lower, because I can see that these guys, where they are, this is less than 1%. Then we are looking for the dollar index to give us 1:6, right? Of course, these are supplies, but I'm not looking for these supplies to hold here price can just give us those reaction, maybe back to our POI. So maybe around here, come here, drop, come here, later taken out, come here up until the movement ends, right? So this is my outlook for the dollar index, right? You can do your homework. So here now, if you look here, the reason why I'm looking for them to continue pushing here, if you look at this, even if you put our SL2 3 pips here, still okay. If you look at this, man, this is a big push. It's even enough for this week. This is like see 2.45%, right? That's enough gain, because that means so you can see I was looking for this, and this was with the class there. Now when you check Euro USD, we will go EURUSD GBPUSD, and let me see, we still have time. Okay, EURUSD, if you look at the current structure, so because the dollar index is buying, these guys will be selling, right? So this week the CPI, I'll personally be looking for EURUSD to even keep dropping, because if you look at this, they already collected this liquidity, which is around here, tapped into this major supply. This major supply is the one that broke structure around here. Those suppliers who went in there, they were responsible for this shift. So these guys can even drop up until they take out this leg, so they can even push until the whole of this year, right? But let's see, man. That's what I think, right? At the end of the day, the market will decide what it decides. Yeah, so if you look at this, they shifted this, so there's some traders who will be looking at this as like I'll say, the dollar index is dropping, so it's pushing up. If the dollar index is pushing up, these guys, they should push down, so they can even give us something like this. If they want to push up, then they can push up, but either way, I'm looking for a drop, right? I'm looking for a drop. So if I pull my Fibonacci from this leg to this leg, let's go back to candlesticks. These guys, they have corrected 78.6, which is good. Even if I stretched it to this one, they have, if I stretch it to that one, still they have corrected 50% and 61.8. These are good corrections, right? So so they already came to this one, they already retraced from this one, sorry. Yeah, so yeah, one can even sell here. There's like a 0.45%. If we put it here, there's like 0.29. And if I remove this, so the reasonable break or structure that makes sense is this one, other than those ones at the top. Oops. So what I'm gonna do is look at this one as a sub-internal break or structure. So I can even pull my fib from this one instead of the sub-internal ones. Like this, 50% to 61.8. Even if I don't target 78.6 just for tonight, but this is 1:4. So since I'll be going to sleep, there's no need for me to like target small peeps because I'm a swing trader. So since I'm a swing trader, I don't need to risk too much. So our demand, yeah. So from here now, I can even pull my fib from this one to this, but let's go daily. So this one here, so this still less than 1%. And remember, you need to risk 1% of your trading account. So this is still less than 1%. So you can just put your stop loss above there just to give it a room to breathe. But what I see is they already corrected this supply here. If I zoom in like this, we had price failing to close above here. So we had this, they failed to close up below, failed to close above, failed to close below. They closed below. Already they corrected this one with this sub-internal lower high. From here now, I'm looking for this supply. So this supply, they can play around, but I'm still looking for them to close below and continue dropping through the night, even tomorrow, even this week. So we will see. You might see that maybe during CPI, price will be here, and most of the traders, obvious, they'll be jumping in because of this sub-internal structure. So there can be those spikes that drive price back up, but you will later see the real movement pushing structure where it should be pushing, because those events, they just there to add volatility, right? Instead of price like moving slowly, that time we'll be moving faster, but they don't just change the direction, right? So we have EURUSD and we have gold. Like I was saying, I'm already on gold sales. If you look at gold, we can go weekly or monthly, it doesn't matter. What matters is if I take my fib from this to this leg, we have corrected 50% of this major high and this major low. So from here where they are, we can see that they haven't taken out this level here. But if we look at this level, we can even plot price around 5,000. Let me do this. Exactly at 5,000. So then we can lock it. We have 5,000 there, but the real movement is around $4,822. But between those spaces, between 5,000 and 428, we have a breaker block here that price can come and retrace from. This is a major breaker block. But already these guys, like I was saying, when we pulled our Fibonacci, they already corrected a discount of this area of this movement, right? They are inside 50% and 61.8, because if you look inside 61.8 and 50%, we have this candlestick here, and this candlestick here, I look at it as my supply because it had double bottoms here, double tops there, and those double tops, they were our liquidity. Prices collected that liquidity, tapped into that supply. And if you look into the supply, this is a daily time frame. I'm not saying this supply is the one that's gonna break structure inside. If it does break that structure, that's good for gold, but they can just give those retracement, maybe back here before they push like this, then back here before they do that, because before they do this, we'll be already out. Now this retracement, if it does retrace, that's a good retracement, because we are getting this retracement from a higher time frame. Now when you look at the current structure, we can refine our POI to this candlestick or to this range here. Why this range? Because this is the same range that broke internal structure and external structure, right? So if we look at this, these are good areas for price to retrace. Now when they retrace there, our first range is $4,333 here, right? So looking at this range, this is a beautiful range. We also have a mini sub-internal range around here, which is 4,516. So these are our interest zones that we should be looking for this week, right? These are this one, right, is our first one. That one is our first one. Now this one is our second one, before we can even talk about that one, because once they take out this one, that means we have broke that structure. But I'm not looking for price to break structure, because we still have those breaker blocks here, which is untapped. And if you look above, or below that breaker block, we can see that we have this liquidity that is not yet taken out, and this is gold. So what they can even do, they can push, they can even fail to break below this one. They can even do something like this, then push and come like this, and push, then later drop. But like I was saying, man, those are big movements. So what we should be interested on, even if we move this range to here like this, because this is the candlestick that is holding every candlestick here. So we have a good reaction here. So I can even wait for them to close below this, right? But since they have closed already above, sorry, below the previous one there, that's why I say I'm in, because I went in here and my asset is around here. I'll share everything in the in the group, those who are in the group, they will see it wasn't a signal. So my target is like 1:8, but I'll be looking at price. But if you look at this one, this is simply just a compression, but we're not trading according to that trend line, saying that trend line has been broken or whatever. But even if you sell where they are, this 2 hours, even if you sell where they are, then you risk, yeah, exactly 1% of your account. Then you target those legs or those levels there, or you go to lower time frames like this. Sometimes they can come, sometimes they might fail. So if you trade, you can even wait for them to come back here. If they does, right, I'm not sure. Sometimes they come, sometimes they fail. Then from here you can enter, but mine is around here, so I'll be looking at this. You know, the funny thing is I tried to get a sniper, but my stop loss was too close, and I always tell people to give your stop loss a room to breathe, but today mine was very close because I took a first trade there, then I took a loss. I think it was around here, and I was wicked by this move. Then I waited after the break here, also waited again. Then when they came here, that's when I went in. So they're still bearish, but I'm looking for, sorry, they're still bullish, but I'm looking for this to be our sub-internal leg, because if you go to 2 hours or 1 hour, yeah, even if they don't correct this whole move, but my lookout for them is to continue dropping through the night. Then I say we can check. Okay, we are 9 minutes before we start the private community class, but at least you can go and check this space also on your side. Then you can use your own confirmations before you execute. But on my side, I'm not giving you any signal or anything to do anything. Right, I'm simply showing you how I personally look at these things. Now if you look at this structure, we are already here. And you can see we are from our external time frame, which is a monthly. We previously had a major external break of structure. So already now I know that since we are in this deep supply here, which is that major supply, this here I'm looking at it as a liquidity sweep. Why? Because they already shifted structure there. So my target now is to look for price to come to this range, take it out, take out this range and that major one there. But currently I don't care about those deepest one, right? What I'm interested on is this current one here. Now, if you look at this current one, we also came from a supply. So from that supply, I'm looking for price to come and take out this leg. Actually, before you take out that one, they should take out this one, because after that, then I'll be looking for and a change of character, which is external. Right. So we have a major swing, which is this leg here. This is our major leg, because now here they failed to close above, just like here they failed to close below. So this is our current range right now, and I'm looking for this. Since they failed to close above this one, I'm looking for it to be our sell range leg that is gonna hold structure. Because if you look at this, we have this as our high low that initiated buyers. From buyers, we had this higher low or major higher low that initiated sellers. So from here, this was the first indication that they can fail to hold structure and keep dropping, right? So if you look at this, you can see we had liquidity here, and that liquidity was taken out into our POI. So from our POI, I'll be looking for price to take out that level and this one and change character if they are willing to change character, because that change of character, we are simply moving in a range. So they can fail to close below, but that will be enough for us even if they fail to close below. But if they close below, that means also a good thing, because that means we can continue holding to this next one. If they fail to close, then we can go out, because they can give us something like this before they do the whole movement like that, right? So if you look at this, we also have an order block 2.0, and it's not tapped, right? And it's not tapped. Can put it as an extreme supply, or order block 2.0 is still okay, right? But now when you look at the internal structure, now the internal structure is bullish. So I'm looking for a correction of a bullish, or they break this bullish structure, because if you look at this bullish structure, we have an internal change of character here, then a break of structure here. And now when you look at this, you can see that, okay, this mini movement, it's not that mini, it's a major actually, but according to institutionals, they look at this as mini movements, because this is when those institutional traders take breaks, right? Because break from where? If you look at this, from this leg here, we then generated this, we then generated this, then we are maintaining this current one here. So this current one here, even here from this demand, they can push price back here, and that's when maybe from there they can even give you this as a supply, this here as a inducement, because from here they know that, okay, from here we can trap these traders who will be buying from here, or from there they can even push up. I'll show you more. From where they are, they can even push up to those levels, because if you look here, they can push up from this or to the extreme supply there at the top. So even here they can come to this, something like data to this. They can personally, they can also do that, right? Like I was saying, up to the market. What do we do from here now? We just, like here, the according to what I see, I don't want to see two POIs around where I want to enter. So if what I will do is focus on the current one, which we already mitigated right now. We already mitigated this one. Are we closing below candlestick? Are we closing below here? Yeah, going to lower time frames, we might see that we closed. Yes, around here. So even if we look at the candlesticks, bodies not there. Yeah, I'll take this as some internal change of character, because here price was breaking structure, going up, respecting the lows. Then for the first time now, we can see price failing to do that around here. And from around there, we can also see that price induced here. And after they induced there, they broke the sub-internal structure. Now what I see here is, I can see that already they came. Now if you look at this, we can see we have this leg that was sweeping liquidity as our high, right? We changed the character internally, giving us this a low, then this the lower low, then this is a lower high, and yeah, we can get a lower low. We can even come and get a lower low around here, because where they are, I cannot wait for price to say retrace within those lower time frames. What I can do is enter and see how they will close here before I can decide what to do with price. Like this. If I want to be safe, then I will personally maybe put it around here, but I like to give it a room to breathe. Since it's for the overnight, I can push it there, then come to this higher time frame. Then I can say that, okay, before they get down to this demand, let me see how they will close around 50% and 61.8. Then I can see that around 50% and 61.8, that's 1:4, which is good. But if they break with the body there, that means it's good again for me to continue holding like that. Price is not yet fully confirmed. Someone can even set an alert around 1.36288. You see, those who want clarification, they can say that now. I'll personally wait for them to close there, and then you start looking for those sales. But either way, bro, I'm looking for those sales also. So yeah, man, I think we'll meet again tomorrow, see how this moved.